Hey everybody, it's Eric from Alpha Crunching, and I'm excited to announce an update to our SPX Weekly Forecast tool. In the new update, you're going to be able to compare the weekly forecast for the upcoming week to the previous weeks, and this is going to help us spot shifts in momentum, weaknesses in trend, or all around choppiness in the market to help us dictate maybe what strategies we want to focus on for the upcoming week. A lot of the strategies we do at Alpha Crunching take advantage of the 5 expirations per week that SPX has to offer, and we've really been focused on 0, 1, and up to maybe 7 days. I think this new feature is going to allow us to kind of zoom out a little bit and get to selling options. That's how I like to trade, selling spreads, iron condors, credit spreads with longer duration or DTE. And I'm thinking in the neighborhood of 30 days, maybe even 45 days if you want to go tasty trade style. But let's back up a little bit and talk about what the forecast tool is and what it's showing us. So the forecast tool, basically what we do is we break SPX into 5-minute intervals starting at 9:30 on Monday morning all the way through till 4 p.m. on Friday afternoon, and this is in Eastern time. And what we do is we take each 5-minute increment and we get a typical movement for that particular increment and over the past month, and then we accumulate those, the net delta, whether it's positive or negative, and we accumulate that over the course of the week, and that's what gives us this forecast chart. So it's very similar to seasonality, something in forecasting business, income and expenses and those type of things. We use a similar formula, but we're doing it in very kind of micro intervals for the S&P 500. And we can see for this particular week, the week of April 28th, it's very, very choppy. It's net positive because the net values are above 0, but there's really not a strong trend anywhere. And that's probably can be seen, as you know, if you've been following the market the past, through the tariff stuff. It's been pretty crazy. So what we're able to do now, though, is we have the current week, and remember, this is the week of April 28th. This chart is available before the trading week begins. It updates every weekend, so we know on, let's say, Sunday, April 27th, that this is what the forecast is, and we can now select 1 week before, and that's going to show us the current week's forecast, the week of April 28th in this example, with the previous week's forecast. And we can see, and this isn't the best example of much of a change because we're still in a choppy market. Well, I'm going to show you a really good example here in a minute. But we can see that essentially the market is still moving in a relatively similar fashion. But the end of week drop off that we saw the week before has improved. We see basically we're ending in net positive territory, whereas the week before was more of a negative sort of territory. We were in negative values here. So this was, depending on what part of the week you're looking at, you'll see a little bit of strength or weakness depending on what part of the week again that you're looking at. So this isn't the best example. What I'm doing with this type of information, though, is I've been trading iron condors, which has been going well the past few weeks because we have a choppy market, volatility's high. I'm selling iron condors, and that's doing pretty well. So this is kind of solidifying that iron condors are still really work. But what I want to show you is a really good example of a few months ago. And I'm going to switch over to the SPX daily chart, and I've highlighted just the beginning of each week from Monday, February 10th to Tuesday, February 18th. The market was closed that particular Monday, and that's when the market really kind of rolled over. If I zoom out a little bit, that's when the rollover started to happen. And you want to blame it on tariffs or whatever, that's up to you. That's kind of I think the catalyst for a lot of that pullback. But I want to go back to the forecast for the February 10th, what that looked like compared to the previous week, how the market reacted in the future week, and then we're going to kind of step forward and we're going to watch how this momentum shift both in the market in real time as well as in the forecast before the trading week begins. So let's go back to Monday, February 10th. I'm going to come in, choose the week. I'll go back to February 10th. And remember, this chart was available on Sunday, February 9th. All the stuff you're seeing was available before the trading week begins. So we're looking, we think of it, it's Sunday, the February 9th. We're looking at the forecast. We're saying, hey, okay, net, the market's been relatively bullish. I'm probably going to stick to the long side. What did it look like the week before? Well, the week before was also very bullish, had a bullish lean, I like to say. But this week, the values of that bullishness have actually increased. So I'm continuing to stay on the long side until price proves me wrong. So if we look at the market for the week of February 10th, we had Monday, Tuesday, Wednesday had a little bit of a dip, but we ended up closing higher at the end of the week. So again, this isn't a prediction about how the week is going to exactly go, but we're looking to stay net long because we have a bullish forecast and a bullish forecast that's actually increased from the previous week. So let's go to Tuesday, or excuse me, it would be Monday the 17th because market was closed, but let's sort of flip forward into the 17th. So if we come in here, what do we see? Oh, we still have a bullish forecast. You know, maybe the market's going to keep going higher. Let's look at the week before. Well, the week before, we're actually seeing this week's values in blue sort of drop a little bit. We're seeing a decrease in bullish momentum. That doesn't mean we should just straight up short the market or, you know, we're going to have a crash or anything. We're looking at very small time increments and knowing that the net delta, and when I say net delta, I mean how many SPX points does the market tend to close higher for each of these little bars when you accumulate them. The net delta, that strength in points of closing higher, is actually starting to weaken a little bit. So this is a week when we're going into the week of February 17th, we're saying, hey, you know, there's a little bit of a slowdown here. I'm going to be a little bit cautious. Maybe I'm going to look for a short signal. Maybe I'm going to start selling call spreads because I'm still long from last week. Maybe you start to balance out a little bit, knowing that the momentum has weakened just a little bit. So if we look at the week of that 17th, we had Tuesday, Wednesday was up, and then we totally rolled over the next towards the end of the week. So this forecast and that weakening shift between the previous week and the current week was a little bit of a heads up that maybe we could get a pullback in the market. Now, you know, I don't want to say that this predicted this huge downtrend. That's not what we're doing. We're just looking at week over week changes, but it's setting you up for potential trend shifts. In this case, it did a great job. Let's kind of fast forward one more week to the week of Monday, February 24th. So again, we sort of rolled over at the end of this week. The forecast was starting to weaken here. If we come into the following week, the February 24th, we can see the forecast still kind of has this bullish lean. I do notice that this end of week is starting to really kind of get weaker. But if we go 1 week before, again, now the magnitude of the points is decreasing. So we're seeing a decrease in that uptrend with the net delta of points. And this is one of the reasons we add the overlay, because you could see this before. We could see that this week, you know, we were peaking at, let's call it 80 points. And the week before, we were peaking at, you know, 100 points, but it was kind of hard to see, and you had to flip back and forth. So the idea of adding the overlay to where we can see the previous week is, I think, a little bit easier to see. We see that weakening. And if we go 2 weeks before, because we were looking at that, we can see, look, 2 weeks before the magnitude was, you know, rising and peaking around 150, and then the next week it was around 100, and now it's closer to 80. So even though the trend is still relatively bullish, that weakening is sort of a heads up. So that's what I'm going to be focused on for my sort of longer dated trades. I'm going to loosely call it 30 days to expiration. So again, the weekly forecast is updated every weekend. You can get it at alphacrunching.com, and we do offer 50% off both monthly and annual plans right now using the code SPX50. Thanks for watching. I'd love to hear your feedback, and we'll see you in the next video.